In 2026, the most expensive launch in SpaceX history did not happen on a launch pad. It happened on a screen. No flame trench, no countdown tower, just a ticker symbol, SpaceX. Shares were priced, orders flooded in. And for a moment, Wall Street treated a company built to escape Earth like the safest way to stay inside the market.
But here is the uncomfortable question hiding behind the celebration. What if this IPO is not bad because SpaceX is weak? What if it is bad because SpaceX is too powerful a story? And what if AI isn't replacing intelligence, but quietly replacing human judgment?
SpaceX began as an impossible sentence. Make rockets reusable. Make space cheaper. Make humanity multiplanetary. For years, that sentence was private. Investors could not vote on it every morning. Traders could not punish a failed launch before lunch. The mission lived outside the daily mood swings of the market.
Then, the public offering changed the frame. SpaceX priced 555,555 Class A shares at $135, and the stock began trading on NASDAQ under SpaceX. Officially, it was an aerospace company going public. But the filing described something larger, a business spanning space, connectivity, and AI. That is where the story turns. Because investors were not only buying rockets, they were buying Starlink cash flows, government contracts, Mars dreams, satellite phones, orbital data centers, and the idea that AI infrastructure might one day extend beyond Earth. In 2025, SpaceX reported roughly $18.7 billion in revenue, but also a $4.9 billion net loss. A normal investor might pause. The market did not pause. It accelerated.
Why? Because the modern IPO no longer sells a company. It sells a model of the future. And AI has made that model feel scientific. Analysts feed assumptions into spreadsheets. Algorithms scan filings. Retail apps compress risk into colorful charts. Suddenly, judgment becomes a dashboard. Doubt becomes a footnote. This is not new. The dot-com era sold eyeballs. The electric vehicle era sold autonomy. The AI era sells inevitability. SpaceX is different because it has actually delivered reusable boosters, crew missions, Starlink terminals in remote places, and a launch cadence no competitor can easily match. That is the good part. The danger is that real achievement can become the camouflage for unreal expectations. Look closely at the pitch. The company is no longer just lowering the cost of access to space. It is turning space into infrastructure for machines. One filing disclosed a cloud service agreement tied to massive compute capacity, including around 110,000 NVIDIA GPUs, with payments approaching $1 billion per month once fully ramped. That sounds less like a rocket company and more like a planetary operating system. And that is the central risk. When a valuation depends on rockets, satellites, AI, data centers, Mars, and network effects all working together, the investor is not really pricing a business. The investor is pricing belief. The more complex the story becomes, the more people outsource the hard questions to whoever sounds most certain. The founder, the banker, the analyst, the algorithm. Here is the twist. Maybe the IPO is not asking investors to trust SpaceX.
Maybe it is asking them to trust a machine-shaped version of judgment. Future markets, AI forecasts, automated portfolios, index flows, and probability curves that make uncertainty look clean. So is the SpaceX IPO good? For SpaceX? Probably. For early employees? Certainly. For banks? Absolutely. But for the ordinary investor, the answer is more dangerous. It depends on whether you are buying a company or surrendering your judgment to a story that has learned how to sound inevitable.
SpaceX may still change civilization. That is the top slice of the sandwich. But even great companies can become terrible entries when price, hype, and automation remove patience from the decision. That is the middle. And the final slice is this. The future may not belong to the smartest investors. It may belong to the few who still know when to say, I don't know.